welcome to Sprott Radio. I'm your host, Ed Coyne, Senior Managing Partner at Sprott Asset Management. With me today is a special guest, Nick Pickens, Research Director, Global Mining at Wood Mackenzie. Nick, thank you for joining Sprott Radio today.
It's a pleasure. Thank you for inviting me. And good to talk to you today.
Well, Nick, I want to get into a couple things today, but specifically I want to get into what you guys call the red metal, copper. Copper is an interesting metal that's been around for forever, really. And, most people have some experience with copper in their homes or, in their electrical outlets and so forth, but now it's becoming quite a modern metal. And I thought with over the 20 years of experience you have in the metals and mining sector, it'd be great to hear your insight into copper and really talk a little bit more about yourself, your background, and a bit about Wood Mackenzie before we go into the red metal. Give us a little bit of your background and how you got involved with this part of the market.
Sure. Thanks, Ed. Yeah. So as you say, I've been looking into the mining and metals sector now for getting on for 20 years. That's actually my background is as a geologist. That's what I studied, and obviously there's a sort of natural progression into metals from there. And I've spent, say, half of that time looking at the copper market in particular. So I've been lucky enough to sort of travel around the world and visit different copper mining operations and meet lots of people from end users to mining companies and so on. So it's been a big part of my career.
And what about Wood Mackenzie? Talk a little bit about your work over there. I spent a bit of time getting ready for this podcast, looking at a lot of the white papers and research reports you've all done. And you guys take very deep dives into the different metals from a supply standpoint, a demand standpoint, functionality standpoint, what are these metals used for, and so forth. So talk a little bit about your work at Wood Mackenzie and how people could actually get access to that information as well.
I think in sort of natural resources space, it's a pretty well-known company. We've been around for a long time now, and our core business is around market intelligence, research, and thought leadership across energy. It's been known in the oil and gas sector and renewables and so on, but also in metals and mining as well. As you say, we have a global team based in different markets that spend our time really digging deep into the numbers and also thinking about the future, what the various different natural resources are looking like in a rapidly changing world. And clearly a lot of the focus at the moment is around energy, and metals fits into that picture better than it ever has done. And so that's a combination of the energy team and ourselves in the mining and metals side is really focused on that and the outlook for the energy transition.
You focusing on copper, maybe you saw this coming, maybe you didn't, but can you believe you're sitting here now in the front and center sort of talking about one of the most modern metals out there? I read something recently that there's 6 or 7 times more copper used in an electric, battery-powered car than there is in a gasoline car. If you think about the history of that and what all these auto manufacturers are trying to achieve, we're going to need a lot more copper, right? I know there's some recyclable copper out there and so forth, but talk a bit about that. What's going on? How has that transition really taken shape over the last decade, call it?
Yeah. No, you're absolutely right. And I think back in the early part of my career, the structural change in the market, if you like, that kind of feels similar with the sort of China boom, right? And that was where everyone realized, I think, from a commodities and mining perspective, how important copper was going to be. And a lot of that demand was really around fixed asset investment and construction infrastructure, building out of emerging economies and so on. And it has been a long time since we started to see these new technologies building out and building into our models and our thinking about how copper might be used in EVs. But if you think back, even only 5 years ago, when people talked about EVs, it was something that I think most people took with a pinch of salt, right? So, but it's really gathered momentum over I would say the last 3 to 4 years in really quite an incredible way. And as I say, we are embarking now in really quite an amazing journey for metals and for copper in particular. And we are seeing, truly a structural change, I think. It's not just copper. There's an awful lot of different metals that are going to be involved in that shift away from fossil fuels and from hydrocarbon. But one thing's for sure, if you look at every end use that's involved in that energy transition, it's pretty hard to find one that doesn't need copper.
Mm-hmm. Well, and you just said something I think that even I kind of forget about is the infrastructure build out, right? Whether it's China or the U.S., we've got we've got to kind of rebuild a lot of things in this country. And so at some level, I would suspect that the construction industry and the infrastructure industry is going to be in direct competition with the electric vehicle industry and the auto manufacturing industry on who gets the supply, right? So I got to believe you're seeing some squeeze points along the way with demand, with potentially new mines coming online, the extension or expansion of existing mines. Talk about the supply side first, because I think that's something that gets overlooked a lot. You know, you hear Ford and you hear Honda and all these auto manufacturer companies out there talking about, hey, we're going to be fully electric by 2030, 2035. But we all forget the number one thing, which is, well, you need the metal to do that, right? So talk about the supply side. What's happening in that? Is there any new developments going on? And how realistic is that for us to get to that carbon neutral future, given the current state of affairs with mines in general and the overall supply?
Not only do we have this sort of electric vehicle demand and energy transition related demand, there's all the other stuff that goes on in the usual urbanization trends and building wire and so on. So there is significant demand growth for copper over the next 10, 20 years. And if we look at that trajectory and then we look at where base mine supply is, a gap starts to emerge. It's not unusual in the copper market to see a gap emerging. You need continual capital investment to continue to generate projects and growth. But if we look on a 10-year time frame, that gap is looking around about 5 to 6 million tons on our base case. This is out of a market, well, total consumption is around 30 million tons. You know, if we want to achieve zero carbon targets that have been laid out in the Paris Agreement, the supply that needs to come online, it rises to something more like 10 million tons in 10 years' time. Now, the market has never, ever achieved that amount of growth in that time frame, you know, in the history of copper project development. So that's the challenge. And again, it's not just copper. There's limitations on the mine development of all of these energy transition metals. So the question is, what has to happen? And there's a whole host of things. The first is that we need more investment, more capital investment, and a change in attitude towards the capital allocation as well. I think most mining companies want to bring on projects, but they need the investor mandate, and they need to find quality projects that give them decent returns. And they also need to be able to get licensing and permitting in quick and efficient ways, and that needs government support and incentive. So there's lots of levers that need to be pulled in order to help us accelerate that supply. And really, that's where the challenge sits.
You bring us something up from a government standpoint. It does seem like both sides of the aisle have agreed that we need to move in this direction. And, you know, I always remind people, too, this is not an anti-fossil fuel conversation, right? This, you know, we're still going to need oil. We're still going to need gas. I mean, this is not something that's happening overnight. This is going to happen over decades. Talk a little bit about what you're seeing from a licensing standpoint, from a government standpoint, from policy. Are you seeing a gradual shift to more and more policy being accepting of mines and approval of mines and so forth? What's the landscape of that right now?
You know, it's really interesting at the moment because I think there are lots of contradictions in this energy transition and lots of dilemmas. If you talk to people in the energy industry, there's a kind of logic going around now where people talk about the energy trilemma, right? You've got security, so energy security, energy affordability, and energy sustainability. And I think that applies to mining and metals and to the copper industry as well. The security element is really what's helping to drive government support at the moment. And this has actually changed pretty quickly over the last 12 to 18 months because we've seen things like the US Inflation Reduction Act coming in, which is supporting more raw material development to some extent, although it's mainly about processing at the moment than it is extraction, but that might change. The EU just last week put out some more legislation around critical minerals and also brought in copper and nickel as strategic minerals in that list, which means more support and recognition as these metals get recognized as being important in the energy transition. So we are seeing that security element driving change. And as I say, that's happening quite quickly. Then you have the sustainability part. And I think this is where there's still a bit of work to be done in terms of joining the dots for people and for governments that actually mining is the answer in delivering clean energy and not the sort of the enemy. So mining has to raise its standards and make sure that it's meeting all the ESG criteria and so on. But ultimately, you know, if we are going to achieve this zero carbon, we need more investment in mining. So that's the sustainability side. And if we look after all of that and the investment comes, then that will look after the affordability element. Because at the moment, the risk is that this doesn't happen. Prices increase so much that we just simply can't afford to do all of this stuff.
Well, you see it in the electric car market in general, right? When Tesla first came out, and this is not a plug for Tesla, but they're sort of the best example of electric cars. When that came out, it was only the wealthiest people could buy a Tesla. If you were driving a Tesla that was like the equivalent of driving a Mercedes or a BMW or a Porsche or whatever it was, now you see more and more auto manufacturers out there bringing in lower price point electric vehicles. Tesla's coming out with lower price point electric vehicles. So I think that happens over time, right? You see that affordability happen. Security, obviously, that is something that has changed drastically. We've all seen that in the last, year and a half. That's probably not going away. Political uncertainty is the one constant we see. And then the last, I think, what you said, sustainability. That's the thing I think that people are trying to get their arms around the most. I agree with you that there's two sides of this story. There's the extraction, manufacturing, refinement side of the story, which some people don't want to know about that, and they still see that as a negative. But the reality is you can't get to the other side, the sustainability side of consumption of clean energy without that, right? So I think there's still a lot of education that has to happen out there in this space, and you're seeing that talked about more and more. What else should investors be thinking about when they think about not just copper, but battery metals in general? Maybe let's take a step back for a moment and talk a little bit more about that. You guys do a lot of work at Wood Mackenzie on all the metals, as you mentioned earlier. What other opportunities or issues are you seeing out there in this energy transition movement? Not just copper, but just in general. What are you seeing out there?
Cathode chemistries have evolved rapidly, and they involve a lot of different metals, as you say. We've been doing a lot of work on thinking about how that might change going forward. And this whole scarcity issue that we've talked about, or concerns, means that we think actually down the line we'll get a sort of quite a diverse range of different chemistries and different end uses, because it's not just cars as well. We've got batteries for energy storage and other end uses, and electronic portables and so on. Our view actually is that the sort of predominant battery chemistry in the near term will be probably nickel-based, actually. So nickel is clearly an important energy transition metal, sort of followed by the sort of iron-based chemistries like LFP, so lithium. Big interest at the moment from certainly people I talk to around the lithium market, and that's the lithium iron phosphate batteries and LFP. Look, if we look at all of those markets, particularly sort of lithium, cobalt, and of course one final one, which is probably the less well known, but kind of the most important in some ways, is graphite, part of this the batteries. If you look at all of those markets, their growth is going to be huge. I mean, we think the lithium market over the next 10 years could grow by 3 times. The nickel market will grow by high double-digit numbers as well. It's kind of a story that's replicated really in terms of supply requirement for those commodities as it is in copper. Perhaps the difference with copper is, as you say, if you look at it end uses, it's across the board. And nickel, lithium, cobalt, graphite very much specifically relate to those battery uses.
Yeah, nothing happens without copper for sure. You can do everything you want, but if you can't connect point A to point B, then it's sort of useless, right? So it's like a flashlight without a battery. I've been talking about this for quite a while with our investors, that metals in general and minerals in general have gone from these sort of short-term trades where people try to take advantage of price inefficiencies in the market and trade it like a true commodity to really more long-term investments. That this is something that pensions, endowments are saying, okay, we need to think about this because this is part of our future, probably part of our investment landscape in perpetuity. I mean, this is not going away anytime soon. This will be part of our life going forward. And so it's interesting. We're at the tip of the spear of really talking about this, trying to educate our investors on it. We've had tremendous interest in this space, and we're trying to continue to lean on folks like yourselves and firms like Wood Mackenzie to really help us get educated, but also help educate our investors. So I really appreciate you taking some time out of your schedule today to really talk a bit about copper. And I'd love to have you maybe back on again towards the end of the year as the market continues to progress and new things happen in the space and the economy changes, right? A lot of changes have been happening in the last year and a half in the market. Love to get some additional insight from you. So before we sign off, is there anything else you'd like to leave the investors with, or any talking points that you think may be of interest for our listeners to hear?
Oh, goodness. Look, I think this theme isn't going away. And if anything, it's gathering momentum.
Well, for those that want to learn more about Wood Mackenzie and Nick's work, I encourage you guys to all go to Wood Mac. It's WOODMAC.com and take a look at some of their additional market insights and online reports that they produce. It's a lot of insight. I know us at Sprott, as a firm, we pull a lot of information from your reports and great educational pieces on there. So we really appreciate the work you guys all do there. And Nick, thanks again for joining Sprott Radio.
It's a pleasure. Thanks, Ed.
Well, once again, I'm your host, Ed Coyne, and you're listening to Sprott Radio. Thank you for listening.
This podcast is provided for information purposes only from sources believed to be reliable. However, Sprott does not warrant its completeness or accuracy. Any opinions and estimates constitute our judgment as of the date of this material and are subject to change without notice. Past performance is not indicative of future results. This communication is not intended as an offer or solicitation for the purchase or sale of any financial instrument. Any opinions and recommendations herein do not take into account individual client circumstances, objectives, or needs, and are not intended as recommendations of particular securities, financial instruments, or strategies. You must make your own independent decisions regarding any securities, financial instruments, or strategies mentioned or related to the information herein. This communication may not be redistributed or retransmitted in whole or in part, or in any form or manner without the express written consent of Sprott. Any unauthorized use or disclosure is prohibited. Receipt and review of this information constitutes your agreement not to redistribute or retransmit the contents and information contained in this communication without first obtaining express permission from an authorized officer of Sprott.